Hey, I'm Joshua Frank, co-founder and CEO of The Tie, and I'm very excited to be joined by Morgan Krupetsky, who is Director of Business Development for Institutions and Capital Markets at Ava Labs, and Luigi Denoro DeMeo, who is Head of DeFi from Ava Labs, for our first ever quarterly State of Avalanche call. If anybody throughout the call has any questions, anything they want clarified, please ask them. We'll try to get to those at the end of the call. The call is going to be split into three. So the first section is going to be a background on Avalanche. Second, we're going to be highlighting use cases and partnerships around Avalanche. Then third, we're going to go over the Avalanche platform updates and things to look forward to in Q1 2023 and into the new year. And so with that, Morgan, why don't we get started with a bit of a background on Avalanche? So what is Avalanche? What is Ava Labs? And what is the relationship between them?
Really diving right in, Josh.
Got to go for it.
But yeah, thanks for having us. We're really excited to be here. Just by way of quick background, I think you mentioned that I run institutional BD at Ava Labs, and Luigi runs DeFi. We work extremely closely together, just kind of like depending on which partners we're talking about. But we're really excited to be here and kind of dive in. So maybe just to kind of take a step back and like as a quick refresher. Ava Labs was, we come from pretty academic roots. It was founded by Cornell computer science and distributed systems professor Emin Gün Sirer, and his then PhD students, Kevin Sekniki and Ted Yin. So today, Emin is Ava Labs founder and CEO. Kevin is our COO, and Ted is our chief protocol architect. Emin's actually been in the space since kind of like the beginning of cryptocurrencies. Back in 2002, he actually created the first ever proof of work cryptocurrency and peer-to-peer eCash system called Karma. And then even through today, he continues to be a notable thought leader in the space, an author, lecturer, consultant, advisor to many crypto projects, governments, central banks, Fortune 500 companies, and like everything in between. So he's like the OG of OGs. But ultimately at Cornell, the team discovered a report that was published by a pseudonymous author called Team Rocket in 2018. And the report introduced what was called Avalanche consensus, which we'll get into in a little bit, but it's effectively the third ever most novel consensus mechanism after classical and Nakamoto. And from there, the group went on to build out the Avalanche protocol around the Avalanche consensus mechanism. And so as a public blockchain network, Avalanche was launched by the Avalanche Foundation on mainnet in September of 2020. Avalanche itself is an open source layer 1 blockchain for decentralized applications across DeFi, enterprises, institutions, gaming, and NFTs, and probably a lot of other use cases that have yet to be discovered at this point. Ava Labs ultimately is a software company and the license service provider to the Avalanche Foundation. What we do is a few things. We build infrastructure and tooling to really kind of drive forth the growth and adoption of the Avalanche blockchain. And what this means from a business development standpoint is really working with partners kind of across many different industries to ultimately, at a high level, invest in, build on top of, or somehow participate in the Avalanche ecosystem. So as a team, we really help to kind of cultivate the growth and build out of the network with partnerships, investments, facilitating connections with other ecosystem components or whatever it may be.
And so moving over to you, Luigi, there's seemingly countless layer 1s and layer 2s on the market. So why Avalanche? What differentiates Avalanche from its competitors, and why should anybody, why should any of the listeners pay attention and care?
Nice loaded question to start. Yeah, so I think there's a few reasons. Avalanche, really the architecture was purpose built for what you're kind of seeing develop in terms of the actual latest developments that we released. So what that means is that Avalanche is kind of what I call like an umbrella network. You can have multiple virtual machines launching their own blockchains. You can have interconnectivity between subnets, which are the way that Avalanche horizontally scales. It's really purpose built for a bunch of different use cases. So if anybody wants to consider Avalanche, there's a few reasons. One, if you're a developer and you like a low level protocol that isn't as opinionated, Avalanche is really good for this, because you can, we're talking to teams that are writing a specific virtual machine for their one use case and deploying that as a subnet, and that's not something you can do on most chains. However, if you're a developer that also wants to deploy something like an EVM-based subnet, perhaps this is something that's also interesting to you. We have a nice SDK that's available that you can leverage. So, deploy your own EVM blockchain quite seamlessly is nice. But because, to take a step back, because I said Avalanche was like purposeful in its architecture design from the get-go, we have this whole notion of subnets, which are effectively different validator sets of the Avalanche network that can talk to each other. So we recently announced the Avalanche Warp Messaging, AWM protocol, which allows for different subnets to talk to each other in a way that is native to the protocol, meaning you don't need to trust any third-party bridges. We've seen all the issues with any type of bridges that have happened in the past, and being able to facilitate this directly into the network, I think, is something that many people are very excited about. And so not only does Avalanche horizontally scale its blockchain with subnets, but they also talk to each other. And so when you're asking about different networks that one might consider, Avalanche is pretty customizable to whatever your use case is. So if you want to think of architecturally, I like to say it sits somewhere in between a Polkadot and a Cosmos. Not so opinionated as a Polkadot from an architecture perspective, where there's much more stringency in terms of the parachains, and then not as free form as Cosmos Zones, which is sort of modifying a little bit, but not as free form as that. So it sits architecturally there. But if you're looking for a protocol, that actually has a native set feature where each blockchain could talk to each other, I think that you're going to find that in the future that's going to be an incredibly dominant feature. So if you're thinking of things like layer 2s, supernets, these things that in today's day and age don't have any native way to talk to each other. So let's say I wrote a Substack recently. It's kind of a silly one, but I use this use case of like Pikachu Subnet, I call it. It's like a game. You could play Pokemon on it. You sort of level up your Pikachu. He gets bigger and bigger and stuff like that. And let's say like 10 million people start to play on Pikachu Subnet, and they're like the new Tamagotchis or whatever. I'm probably dating myself, but let's say everybody's playing on this. Well, because of the cross subnet communication, the AWM, all the liquidity that's on the Avalanche C chain right now, all the DeFi apps, all the composability already built there can be leveraged directly from the subnet. So the user doesn't need to worry about moving my liquidity all around a bunch of subnets. They don't need to worry about, how do I get off board to an exchange? All these things, they can be custom built directly from that Pikachu subnet directly to and through the Avalanche C chain. So that's just not something that really exists on any networks right now.
So you actually went straight into my next question, which is awesome, which was on subnets. But one of the things that the Avalanche Foundation did last year was announce a 4 million Avox multiverse incentive program, which at the time was valued at $300 million to encourage and support the use of subnets. So what have you seen from an early adoption perspective on subnets? What types of applications are being built on subnets? But what are we, what do you guys expect to see in Q1 of this year and through through the rest of the year? Like, what types of applications are coming out? What are you specifically most excited about?
Yeah, so if 2022 was the year where we deployed our first subnet and subnets, 2023 is the year where subnets can like organically grow, because in 2022 we didn't have elastic subnets, which effectively means permissionless validation of a subnet. That was not something that existed in the protocol yet. We also didn't have AWM, so subnets couldn't talk to each other. So basically, like the two most important upgrades on subnets didn't exist last year, and because of that, it was really education / getting them up and running / getting the infrastructure and tooling like RPCs, explorers, and everything built up. In terms of this year, now that these final items are starting to get delivered and quite quickly, we have maybe I think it's 75 subnets in the pipeline or so. I'm not saying they'll all launch this year, but many of them will. And that's our expectation. and many of them quite soon. I think a few of them will launch this week. DEX, for example, which is Essential Limit Order Book Exchange, DEX, fully on-chain DEX as its own subnet, will launch this week, as I understand, and then there'll be some others. So excited about that. In terms of multiverse specifically, that's an incentive program for subnet adoption, and that really hasn't been used because we haven't really seen this big unleashing of subnets. I know the first announcement of the DFK rewards that were out there in public, those actually never ended up materializing because of just virtue of how that deal was struck. So, basically the whole multiverse fund is untapped at this point. So we'll see a lot of them go this year. I think, if you think about Q1, we'll see probably, 4 or 5, maybe 10 subnets go live. And then after that, I think you'll start to see an unleashing. I think the one big piece that will really start to accelerate this adoption is C-chain to subnet communication. So that's the only piece out of AWM that isn't deployed right now. And the reason that's so important is if I want to deploy my own subnet, well, I want to take advantage of all the infrastructure on the C-chain. So I want to take advantage of Chainlink feeds. I want to take advantage of native USDC. I want to take advantage of BTC.B or Avax and be able to move them without, sort of trusting third-party bridges. And once that integration is possible, I think you'll see a much wider adoption of subnets.
Maybe, Josh, also just to kind of take a step back and summarize kind of some of the things that Luigi was referencing in terms of just like what are subnets at a high level, and you're kind of inferring this from what Luigi was describing, but at a high level, they're just application specific blockchains or app chains, however, you've come to kind of think about them, but it can be one application per subnet, or it can be multiple institutions on one subnet, or just depending on what the particular use case is will kind of dictate what that subnet looks like. But subnets are extremely kind of customizable across many different parameters. So the commonality between all of them is that they're kind of powered by Avalanche consensus. And in some senses, they share validator sets or subsets of the primary network validators, just by definition of what they are. But everything from which virtual machine they build on to whether they're public or private, permissioned or permissionless from an access and validation standpoint, which gas token that they use, all of these things can be customized. And so, we realize if you're obviously a gaming company, you're going to have very different requirements and parameters and considerations than if you are a financial institution building on a subnet. So all of these things can kind of be addressed in the context of subnets. So from a partner standpoint, they're really optimized for a variety of different kind of use cases and industries and enterprises, whether it's gaming, governments, loyalty point systems, financial, institutional type of use cases, payments, so on and so forth. So it kind of really runs the gamut in terms of what they could be used for. And I think to Luigi's point, we're really excited for the year ahead, because last year I think was all about kind of jumpstarting the narrative of what subnets can do. But now we're getting to a point where partners are proactively coming to us saying, we know we want to, or that we need to build on a subnet, or we need to use a hybrid approach, or whatever it is. And so I think we're really excited to kind of demonstrate like what this vision is that we've had all along, like what it could start leading to.
And so going kind of past subnets, but I think obviously tangentially related in many ways, is that Avalanche has seen major traction on the partnership front. Forging relationships in 2022 with firms ranging, and into this year with firms ranging from AWS to KKR to Shopify, Deloitte, and a bunch of others, which I'm sure you guys can speak to. Why are these partnerships important? And can you discuss the nature of the relationships and what that actually confers, right? What is KKR doing on Avalanche, for example, and AWS and all these different, other partnerships?
Yeah, so I think just in general, when we consider partnerships, we're very proud of that they're all pretty embedded and meaningful. And I think, and part of the reason why I'm here, and obviously I'm drinking the Kool-Aid, but I think a major part of why I'm here is that the team has always gone about things extremely kind of thoughtfully and strategically. We're not throwing spaghetti at the wall and kind of seeing what sticks, but I think we're largely successful in forging these relationships and maintaining these relationships because we're very thoughtful about how each one kind of fits into the broad-based ecosystem and the target state vision that we have. And so each one is not just like an announcement. It's multifaceted, and there's multiple like aspects to the partnership. And I think overall, in addition to that, and kind of related to that, is it's really the tech that I think that excites a lot of our partners as well as the team. Obviously, we've been talking a lot about the tech in and of itself, and I think we're all extremely confident and proud of the tech that we've built. But we also have this kind of amazing team, this mix of engineers, academics, and business people that are really able to kind of speak both languages of like Web3 and Web2 and kind of help bring our partners along. That said, I think that the nature or structure of each partnership is differently and ultimately kind of serves a specific purpose, and it just depends on which partner it is that we're talking about. But our goal, if you remember, is to drive forward the growth and adoption of Web3 and particularly of the Avalanche platform. And we're not going to do that, as Luigi likes to say, by trying to kind of continuously vie for like the same 17 users of DeFi, of which Luigi is 5 of them, right? We really need to bring the traditional Web2 world along, and included in that is bringing along major traditional financial institutions, Web2 partners into the space. So our partnership with AWS really focused on infrastructure enablement, really making it as easy as possible for individuals, enterprises, and governments to validate and build on Avalanche. Our partnership with KKR was to ultimately allow them to tap into a growing mass affluent investor base in a way that's more direct through tokenizing part of their offering. Our partnership with Shopify to allow their merchant network to diversify their store offerings with NFTs, and then with Deloitte to get disaster relief recovery funds to victims faster. So they're all different, but they're either in some way using Avalanche to kind of power an ultimate use case or business case in a way that we kind of work with them, handhold them to ultimately effectuate like whatever it is that they're trying to go for.
So you actually brought up a great point there, which I love to talk about all the time, which is the fact that there are about 17 users in DeFi, right? Where we really haven't hit, this kind of inflection or adoption point. And so, my next question was actually going to be, mostly at first targeted to you, Luigi, which is, what are kind of the major trends and strategic focus areas that you have, in this year, and in particular, how that relates to DeFi, and how do we get to a point where, the average person, right? We get, I'm not even talking about millions of users interacting with DeFi on a daily basis, but even hundreds of thousands of users on a daily basis. How do we get there, and what's kind of needed, this year and into the future?
Yeah, this is a question I feel like I've been answering for like a decade now. I feel like, how do we get more people into crypto? I would say in terms of DeFi, to me, that was the first pure use case outside of Bitcoin, for crypto in general. And it was one that fascinated me. Like, truly, I view DeFi in multiple lenses. One, for certain jurisdictions around the world, it's incredibly useful to be able to transact freely. Many countries are not able to get a bank, all this kind of stuff. This whole narrative is actually quite real and quite true. And I meet a lot of people around the world that are using DeFi in this way. But as you mentioned, this is quite a small subset of people. So my prediction is we don't see like this, killer application that brings, millions and hundreds of millions of people to be using quote unquote DeFi. I think this more happens in some Trojan horse type of way, where the rails of existing, applications are substituted out for something like DeFi. So if we take the TradFi example, this is something that Morgan and I talk a lot about. I worked at a very large bank. Morgan also worked at this very large bank, Citigroup, and one of the issues that I saw is that it was pretty hard to settle transactions. Operational inefficiencies were pretty high. So I actually believe that DeFi can be the new Rails and infrastructure for which TradFi lives on top of. I don't think that's its only use case, but I think it's a massive one. So if you think about like an interest rate swap where you have two large asset managers just seamlessly, transacting with each other with no intermediaries in the middle, and no, settlement and trade capture systems that don't talk to each other. That's like a, 1 to 100 improvement in life for those institutions and for the whole world, as it relates to better financial market infrastructure. Now, in terms of like specific users, the way I kind of think about DeFi is more like this top of the funnel capture for all other applications. So like when I was using the Pikachu subnet example, multiple games deploying, Web3 use cases, multiple different NFT use cases. All these are going to have a means for which to transact. And so DeFi will become those means. So you'll be able to use the most efficient AMM or way to swap assets. All users are going to need to be able to do that. People will want to financialize some of their assets. They'll want to collateralize them, whether those are RWAs or any other type of asset that they put on chain and borrow against it. It's just something that's not possible today in the current financial markets infrastructure. So, that's how we get there. We bring on interesting assets in terms of RWAs. I think the infrastructures in terms of DeFi and the actual like smart contracts and protocols are, improving massively, and that's something that's actually impressed me so far in the last few months, especially in the wake of the FTX stuff. We've sort of seen builders really starting to deliver some interesting things. So I don't think there's any silver bullet here. I don't think there's any like, Facebook waiting in the wings where everybody's just like, aha, I think this happens over time in a grind. And I think slowly but surely the infrastructure of the digital world just gets replaced.
So,
I think,
yeah, please.
Sorry, I was just going to add to something
Morgan's
Luigi.
got an opinion.
No, I share Luigi's opinion. I definitely share Luigi's opinion. I think just wanted to share that, in my role, I speak with kind of the whole spectrum of crypto native institutions, from big banks, asset managers, private equity firms, hedge funds, and then just really kind of crypto native types of institutions. And particularly as it relates to the former, despite kind of all of the market developments, macroeconomic conditions, crypto winter, so on and so forth, a lot of those initiatives among traditional financial services institutions have not died down. I think that there's cohorts within these institutions that quote unquote get it and that are very much forging ahead with their efforts. And I think over time, the word DeFi has definitely become less of like a dirty word among kind of regulated institutions, obviously in a way that is approached compliantly and within the confines of laws, rules, and regulations. But it's exciting to see kind of the initiatives that they're still forging ahead with. And again, to Luigi's point, thinking about it in the way that it's just, how do we facilitate more efficient financial services using DeFi rails, as opposed to kind of the historical way that people have referred to DeFi before. So it's just kind of reframing like how we're using it. But I think regardless of what bank you work at, for example, you can definitely appreciate the ability to do things faster, more efficiently, in a less siloed way, so on and so forth. And so if that can be powered by blockchain or DeFi rails, like I think institutions are definitely more sold on that construct.
So how do we get there, right? I think a lot of this is, like we've obviously, I think KKR was, the first kind of POC there, right? The first real large asset manager to put their name behind a project like this. But how do we get to the point where, every bank wants to build on top of Avalanche, right? Or large asset managers, do you think permission DeFi is an important part of that? Do you think that, from your conversations with these institutions, that they're actually going to interact with DeFi the way that it is today, right? I think there's multiple things to kind of, unwind in that question. That I know you alluded to the fact that, some of it isn't how we think about DeFi today, but I wonder how much of how we think about DeFi today will these institutions also participate in? Because if you look at, if you look at some of these, DEXs and lending and borrowing platforms, I mean, some of them have real, like, significant usage, right? So, there's got to be some interest among institutions, both in that front, but then I think also on the permission front and, maybe other ways to interact with DeFi as well.
Yeah.
Yeah. So Luigi and I are both very excited about this, but go ahead, Luigi.
No, you go first.
There's a lot of pressure now on whoever's answering.
No, there's no pressure. It's just this is like literally
no, there is pressure.
Luigi's day every day, but we're very excited to share and to kind of also see be on this side and be directly part of a lot of these initiatives. But I think there's two things that I would highlight that are not mutually exclusive initiatives, but at some point I think we'll start we'll see some of these worlds kind of colliding. But there's definitely the real world asset realm and initiatives and all that entails and what that opens up. Besides the fact that we all know that we need a different term for RWAs. And then also just like the institutional DeFi initiatives, permission DeFi, so on and so forth. So I'd say, as it relates to the real world asset initiatives, to your point, Josh, we partnered with Securitize and KKR to facilitate the tokenization of their recent healthcare growth fund. And that's something, the financial and economic asset tokenization initiatives that exist today. I think that the concept of asset tokenization isn't new. But I think what we saw last year was a kind of collection of a bunch of macro factors that came together to really put a sense of urgency among these institutions and other projects focused on bringing real world assets on chain, right? So you had rates in the real world increasing, you had macroeconomic downturn / risk off / crypto winter, just decreasing the value proposition for pure on-chain DeFi. You had stable coins not passing back the underlying yield of the collateral backing them. And all of these things just put a spotlight on the need to bring real world utility, real yield on chain. And then finally, you had major traditional players in the space like KKR and some others actually doing stuff, to use the technical term, as opposed to just like feeling it out. So all of these things, I think, really kind of stepped up efforts among institutions to really drive forward really drive forward tokenization efforts, which that in and of itself doesn't really do much from like a democratization of finance standpoint, but it's really that plus the digitization of the fund subscription management, fund disbursement, loan performance, all of these things together makes asset tokenization economically viable or feasible to lower investment minimums and really kind of bring direct investors, individual investors into these things where historically they did not have access. So that's like one big thing, which we can get into in more detail. Simultaneously, you have the concept of institutional or permission DeFi that you referenced, Josh, that, right now I think the experience is very fragmented because a lot of the permissioning happens at the application or at the pool level and inherently fragments liquidity, fragments the experience, and kind of defeats the ability to have interoperability and composability among these different applications. So there's initiatives that we're working on internally to be able to really address what that could potentially look like in terms of having an environment where you can enable institutional investors to participate on chain in a compliant way while still having a relatively native DeFi experience. So both of those things we're extremely focused on.
Yeah, I think
go for it, Luigi.
Yeah, I think Morgan hit home most of the points. I think as it relates to what people call permission DeFi, basically, like the way I kind of think about this is like the element of DeFi right now that is hard to bring in very large institutions, especially in certain jurisdictions like the United States, is the fact that there is no KYC and AML done. In particular. So like that's like a big challenge for a lot of institutions to get over the hump for, because they're not sure who they're interacting with, right? And if you're not sure who you're interacting with, you could potentially be in violation of AML laws, OFAC sanctions, etc. And so, people refer to this as permissioned DeFi. I'm not sure if permissions is the right word, because I think you're just opting into KYC, but we can still keep all the permissionless aspects of DeFi, but with the KYC environment. So if you take like a big step back, did we really need an FTX to exist if we can have a central limit order book exchange? Now, some would say, well, that might be, sort of like, against the laws and all this kind of stuff. Well, there's no reason we can't KYC all the people that are using DeFi in these specific environments. And if we do that, then you have a permissionless, non-custodial way of interacting with each other that still is very much in the spirit of DeFi, but compliant. And so this is stuff that we're going to be providing the infrastructure to support. I think it's a welcome addition, rather than rather than needing to trust people with your coins, which is antithetical to kind of the reason a lot of people came here into this space. We just need to add a compliance layer on top of it. Doesn't mean we're going to change all the existing permissionless DeFi that exists. I'm very much in favor of that. Parts of the reasons I came into the space. But yeah, I think that we have a chance to kind of also level up and maybe finally bring in some new institutions, not the same 10 characters who are always trading against each other all the time.
I think that's fair. So one thing that Morgan hit on earlier, and I think you alluded to a little bit, is the idea of asset tokenization. And so I've always viewed asset tokenization as being a little bit of a chicken and the egg problem, right? Like, you're not going to have the liquidity unless you have really good issuers, and you're not going to have the issuers without the liquidity. And so how do you go about kind of building both at the same time? Obviously, there's a couple examples of great issuers that have built on, are building on Avalanche and have already built on Avalanche. But, some of these, tokenization platforms have been around since 2017, 2018, some even earlier, right? So how do we get to the point where we really see adoption from kind of both sides? Because it is a two-sided marketplace.
Yeah, I think real quick on my...
Go for it.
I'll go this time. No, I was just going to say, like, real quick, like, I think part of the reason is some of the RWAs weren't all that interesting. And I think that was part of the component of not seeing a lot of adoption. Other macro components contributed to some of the RWAs not being interesting. Like, not many people were super interested in 1% treasuries on chain. Wasn't really all that much to gain from that. But today, I think there's a few things that are starting to happen underneath the surface, which is people are getting more creative with the types of RWAs that they can bring on chain. And they already have networks to distribute those. Like, you don't need to recreate the second part of the equation. You just need to provide an infrastructure that enables the efficiencies gained from it. So, I think we'll have a lot to say about that this year and a lot to announce about that this year. But part of the issue to me isn't necessarily needing to fight both sides. And some, yes, but a lot of it is finding the existing network that exists and just putting those RWAs on chain.
Yeah. I mean, I think there's, to Luigi's point, there's no shortage of assets in the world to tokenize. And from our standpoint, we see a very wide variety in terms of quality of assets, as well as like liquidity and so on and so forth. And so it's, from an asset supply side, it's really trying to cultivate an environment where we have a lot of really high quality assets, frankly, as liquid as stable coins, and i.e. tokenized fiat and commodities, but all the way through to, art, wine, private credit, equity, so on and so forth, and kind of everything in between. And depending on what it is, will kind of dictate what type of end investor would be interested in it or who it's targeting. And so we're kind of, from our standpoint, parallel pathing a lot of this stuff, where we're really focused on cultivating an inventory of really high quality asset supply, but at the same time focused on strategically addressing the retail investor side of things, as well as the institutional investor side of things. And those two strategies are very different. And there's two different like cohorts, or, multiple different types of institutional cohorts who'd be interested in that. But it's bringing kind of all the players to the table in this way, in a way that you can, to your point, Josh, like, jumpstart that liquidity and that demand. And a lot of it, frankly, is about education, and really kind of obfuscating away like the crypto components and just being like, hey, here's an asset that historically you do not have access to, or it has a higher yield to what you're used to getting, or is cheaper to access, or whatever it is. And like that's the value proposition. It just so happens to be tokenized, and this is how you access it. But like the underlying asset is the thing that you're kind of discussing or focusing on or selling, for lack of a better term.
By the way, everyone in the comments, thank you for all the nice and kind comments. Glad you're enjoying. If you guys have any questions, feel free to ask them. We're going to try to get to them at the end. So any questions on anything we talk about or anything kind of broadly Avalanche or crypto, feel free to drop it in the comments.
Yeah, please do, because no one wants to hear us talk for 45 minutes. But yeah, would love to hear questions from the audience.
So moving on from DeFi, an additional, and I think often overlooked, area is GameFi subnets. And so I think a lot of people in crypto kind of have this opinion that like, oh, only like not such great games are already on chain. But the reality is like AAA games take a really long time to build, right? Like, if you think about like GTA 5, that came out like over 10 years ago, right? And they still haven't released a new game, right? So, I think, my next question is really, there are a few kind of projects coming to Avalanche soon, including, I believe, Shrapnel and Gunzilla. So can you chat about the state of Avalanche GameFi and the future of its proliferation?
Sure. I think we made a very deliberate effort as part of the BD team to go after gaming. And we have all types of games. We have games that are the types that you're mentioning, where it's not like a AAA rated game, but it's super fun and for a very core niche of people, like the DFK subnet, DeFi Kingdom subnet. And then there's these like AAA games and very high production and high quality games that are, multiple years into development. So Shrapnel being one of them, they'll have their own subnet. That's going to be really cool. I think that there's a few things, and there's some things that are just completely untapped that multiple people don't have their eyes on. And to me, this is like the mobile gaming world that not many people have been thinking about. I think that, mobile game with, tokenizing of NFTs and tokens in that game, and being able to use those as skins, or being able to level up your character. These are all things to me like that would be very interesting. I always go back to the Pokemon example. Because to me it's like still a wonderful use case for crypto. I remember like bringing my Game Boy to school and like plugging it into other people's Game Boys, and our Pokemon's like fighting each other. That's like an upgradable NFT, and it's a perfect use case because I could take it with me, continue to grow it, continue to nurture it, continue to grow power with it. And like, this is just a perfect use case for crypto. And this is what a lot of games are really getting excited about, because not only can they sort of bring these new economies on chain and have the game live past sort of what they developed in-house and in their centralized servers, but people can like proliferate that game in a more global sense around the world. And that's pretty powerful. It's also another revenue and monetization strategy for them, with secondary sales of NFTs and all these kinds of things too. So, we're really excited. We think the subnet infrastructure is perfect for games. There's a lot of customizability, as we mentioned before. And so there's no shortage of demand on that side right now.
So going back, actually, a question from the audience. I know we're backing up a little bit back into DeFi, but I think you already alluded to this, Morgan. But a question from Robert Dewey is, how does the chicken and egg problem resolve itself for tokenization of assets?
So I don't know which one's the chicken and which one's the egg, but the issue that the space doesn't have right now is the supply of assets. Again, like I think that there's no shortage of people, projects, partners, enterprises wanting to, and you guys can read about it, whether it's on Avalanche or enterprise specific chains, like moving forward with tokenization efforts. But I think, and this also relates, I think, to what we were talking about earlier, just with pure DeFi, of getting like other types of institutions on chain to participate beyond just like the same 10 crypto institutions. So I think these are inherently related things. But I think, I mean, from our standpoint, we're definitely focusing on a strategy that's targeted toward retail and opening up distribution, lowering the barriers to entry. And really for them, I think the value proposition is like, here is, and you're used to investing in stocks, you're used to investing in bonds, maybe like other types of assets. Here are like 5 others now that you could potentially invest in a way that, again, is more easily accessible and happens to be tokenized. But for them, it's just like lowering the barriers to entry and kind of integrating with embedded distribution channels. I think from an institutional standpoint, it's much more of like a targeted conversation, finding the right types of institutional investors who would be willing to participate and packaging it up in a way that's accessible to them, that addresses a lot of their kind of compliance concerns that Luigi mentioned earlier, in a way that, again, like it has to be something that the way that I think about it from an institutional standpoint is like, is this something that they can't get elsewhere, or does it provide a yield that they can't get elsewhere, such that it makes it worth it for them to take other risks like smart contract risk, for example. So that's kind of how we're looking at it. And I think again, some of the subnet capabilities that we were talking about can help kind of address some of those things. Luigi, I don't know if there's anything that you would add, but that's how I would.
Yeah, let's not forget also that there are many different types of moats built around some of these assets in the traditional world that aren't, super eager to relinquish those moats as it relates to monetizing them. So let's not assume that, all these guys are like, oh yeah, throw all my assets on chain and take away my ability to guard them and monetize them. That's very much a reality. And so my view has always been that crypto in a lot of ways is regulatory arbitrage, and sort of a lot of people, basically saying that some of the regulations and some of the actual ways that we're handling our assets are outdated in a digital world. And so part of this is going to be improved sort of foresight on the regulatory front and improved clarity there, to kind of unlock some of these assets. Like I said, I don't think it's a chicken or egg in the sense that we need demand and supply, et cetera. I think it's how do we get the existing ones on chain? And a lot of them can't do it primarily because of regulation yet. Some can, and they are. But the big ones are the ones that, generally speaking, want a little bit more clarity, right? Stocks, bonds, ETFs.
So I actually think a similar and related question to that, which I think you already answered, which is, are enterprise clients waiting for regulation before fully jumping into the space? So I think, you're kind of alluding to, there are certain assets which we kind of need better regulation. But what about like institutions and enterprises themselves? What are you guys seeing?
I don't see any. We're not seeing any hesitation to jump into the space, especially on enterprise. I guess it's like, how do you define it? Are you defining like, large U.S. banks? Because there's more of a hesitancy there, even though they're very interested in looking to do things. They literally cannot hold crypto, even stable coins. They need to I think get some sign off for 6 months. That's the minimum amount of time it takes to get approval to do that. So there's generally speaking, a restriction there. But if you're talking about Fortune 500 companies willing to come into the space, I've never seen a demand stronger on that front versus, anytime I've been in the space. Even before FTX, I would say it's even stronger now. I think a lot of enterprises are finding interesting ways to engage their audience on chain, whether it's loyalty points things, various ways to deploy mini games associated with their brands. All these things are very interesting for them. And to the second question, with respect to the NDA, yeah, I mean, that's standard practice. Most large institutions and enterprises, we do sign NDAs with whenever we're working with them.
I would also add, Luigi, from a financial institutional standpoint, the subnet architecture is something that is very uniquely positioned. And I have this conversation a lot with different institutions to say subnets can literally provide you the best of both a public permissionless chain and the enterprise blockchains that a lot of them are very used to and more comfortable with building on. And so to the extent that they have particular regulatory considerations or requirements or other kind of internal compliance and other types of considerations, that's that's partially, or that's a lot of what subnets can kind of help address in a way that doesn't defeat the purpose of being on chain. And so once we do get regulatory clarity, it will enable them to open up access to or validation of their subnets in a way that can kind of still exist within the regulatory confines of once we get regulatory clarity. But in the meantime, if they want to build a fully permissioned private subnet, like that's possible. And so it's like something that increasingly more are considering and building on, as opposed to you know, these enterprise chains that over the years they've become more kind of comfortable building on.
And so, kind of moving on from there, 2022 and, you know, I guess late 2021 into 2022, it kind of became the, you know, the year of NFTs, right? NFTs became a major trend throughout the entire market, but they've seemingly lost a bit of steam over the last few months. So I'd argue that, you know, the NFT market is starting to pick up a little bit. You know, what do you think the future of NFTs look like? And, you know, how does, you know, Avalanche, you know, which I would say is a little bit newer to the NFT space, plan to, you know, grow its NFT usage?
Yeah, so this is a great question. I think we very much are bullish on the NFT space, but I think NFT space is too broad. NFT, like it's almost like saying the token space, you know, for ERC20s, right? Because you know, an ERC20 can really do many things. NFT can do many things. I think if we could put them into buckets, like I think about NFTs in a few different ways. So one being your general PFP, like your profile picture, fun type of way to engage communities. You know, we're starting to see some actual real adoption on Avalanche for that. We've got a few mints over the last few weeks that have sold out within like seconds. So really starting to see some interest there. All the major marketplaces are here in terms of OpenSea, and there's some native ones deployed in terms of JPEGs and Campfire and etc. So I think that is, you know, is on a strong footing and will continue to grow. Then the other component of NFTs is like, you know, fine art and, you know, ways for people to kind of tokenize real world assets and have a digital to physical connection between these two things. This is something we're starting to see a lot of interesting use cases pop up, whether it be on wine or super expensive paintings and sculptures and things like that. So I think there's a lot to go on that front. And then there's the last front, which is how do you engage your community in terms of like loyalty points if you're a Fortune 500 company, and kind of give people some sort of token, let's call it an NFT that upgrades to kind of engage their audience. So I see somebody's talking about chicken. I mean, you know, I've been like, I had the first call with the chicken team a long time ago, and it's like right away hit me as like a wonderful use case. I even told them on the call, it's like, really don't like the art, but I really don't know jack anything about art. So I love the concept because to me it was like a Tamagotchi, you know, that I can get economic value from. And I was like, I can totally understand this concept because who the hell wants like a little Tamagotchi toy thing that you carry around and you take care of it for days, and then at the end all you have is like this proud moment that you have this great Tamagotchi. Whereas now it's like if you keep taking care of your chicken, it's worth a lot more money, right? So it's a totally different, experimentation. But I do think, like in a serious note, the chicken dynamic and the chicken NFT game is a really, really well done blueprint for enterprises on how to engage their audience. Use this upgradable NFT and a way to continue to engage your audience to keep them always attracted. That's like a really good use case. So on the NFT front, those are some of the things that we're thinking about. I think there'll be no shortage of interesting developments coming soon on that front too.
And so we've already kind of spent a bit of time on this, which is the enterprise partnership front, right? And you know, we mentioned a couple of the projects or a couple of the businesses that are building on Avalanche. But I think the question that I want to dive a little bit deeper into, why Avalanche specifically, right? You know, if you were, you know, imagine we have the 5 biggest banks in the US listening to this call, right? And you're talking about building payment rails on Avalanche, right? You know, I know that's a specific example, but maybe there's another one you want to allude to, but why should they choose Avalanche specifically?
So on that one, I'll say one thing, and then I'll let Morgan jump in real quick. In terms of payment in particular, there really isn't a better infrastructure than Avalanche, and the number one reason for that is finality. Avalanche's consensus enables instant finality of transactions. They cannot be reverted. They cannot be reversed. There's no reorgs. The chain doesn't have some optimistic finality that then turns into real finality later down the road. This is decidedly different than something like an L2. I like to use the very broad example that an L2 is like writing a check to somebody, and an L1 is like paying cash. One's done the second you give the money. The other one, you know, there's some chance that that thing bounces back and comes back later, and you need to revert the transaction. So from that use case, that's been one of the continuous selling points of Avalanche to enterprise and institutions. They've always been quite enamored with that.
Yeah, we didn't go into a ton of detail around that, but the Avalanche consensus around which the entire platform is built is the first and foremost differentiator, both from a speed standpoint as well as a scalability and decentralization standpoint. I mean, again, Avalanche is the third ever most novel consensus behind Classical and Nakamoto, and right now we have about, I think, 1,250 validators and growing, and the network has the capacity to continue facilitating more and more validators with the growth of both the seed chain primary network as well as subnets. So particularly for financial services use cases, you can start to see why sub-second transaction finality is particularly important and relevant and needed. And then obviously the second big thing as it relates to just tech is, again, subnets and kind of everything that they're able to enable from a customizability standpoint, as well as interoperability and kind of integration with some of the native kind of assets infrastructure that we have already kind of built in. So that's really, I mean, we can kind of keep going down the rabbit hole of all the tech, but besides the tech, it's really the team as well. And so I think I mentioned this a little bit earlier in terms of kind of the mix that we have from an Avalab standpoint, but in all of our partnerships so far, frankly, whether it's been with enterprises, governments, institutions, or individual projects, it's really been kind of becoming trusted advisors to them as they go along their journey and really setting them up to succeed in their use case, really listening to them in terms of where they're prioritizing things, what are their strategic initiatives, what are their pain points, and how can we develop something that solves that provides incremental revenue, that saves costs, whatever it is, whatever is important to them. Like, we're very much not, from our standpoint, trying to like fit a square peg in a round hole, trying to find a solution in search of a problem. It's really sitting down and listening and getting a sense of like, what's important to you and how can we work with you to use Avalanche to kind of address some of those things that are important to you and where you're dedicating resources. So I think I'm very proud of the fact that we've definitely become really trusted advisors in the space to a lot of these different partners.
And so my, final question, I actually think you led into it well, is around the tech, right? And it's around tech upgrades. So, specifically, custom VM capabilities, AWM, which I think you already kind of mentioned, and Hyper-VM. So can you kind of discuss, Luigi, the already announced platform updates, but basically, what else is kind of in the works this quarter and this year, and how do those updates support the growth, proliferation, and adoption of Avalanche?
Yeah, this is like, the reason I'm here. I'm really excited about the tech that we're building. I talked a little bit about like it really starts with elastic subnets. If I deploy a subnet and I can't have permissionless validation of that subnet, well, it's really not that interesting, right? It's basically its own isolated blockchain with permissioned validators, and that's not that cool. But if I can deploy my own blockchain and economically incentivize thousands of validators to validate it, now the use cases start to open up, right? And with the announcement of elastic subnets, we followed it up with Avalanche Web Messaging, AWM, which allows these really isolated use case subnets to all talk to each other in a uniform language without needing to trust third-party bridges. Now, one of the things that this enables, like if you think about a use case, because Avalanche is VM agnostic, meaning that you can run any virtual machine you like on the Avalanche network, that means that, right now you have the Avalanche C chain, which is an EVM compatible chain. There's no reason you couldn't have a Solana VM subnet. There's no reason you couldn't have a Move VM subnet, which is like, the virtual machine that Aptos and Sui are using. There's no reason you couldn't have a COSM WASM type of subnet. And what's really powerful about this, if you think about it, if you deploy these on the same network, that network being Avalanche, that means that you no longer have this bridging problem that everybody talks about. All these networks are in Avalanche. They're all talking to each other. They all know each other. And this is much more powerful than, for example, bridging between Ethereum and Aptos right now. So I also think that, in thinking about the customizability of subnets, a lot of people like to compare subnets to L2s in a lot of ways. Well, there's a lot of differences there. A subnet, for example, can be an L2. There's really no reason it could not. You can have the L2 roll up right to the chain, and the sequencer actually be the validator of the subnet, which is quite an interesting construct, because then that would allow you to have L2s that talk to each other, which is something that doesn't exist in the current construct of the way they're being built. And so, in taking a very purposeful direction of what you're building and architecture, we sort of feel very comfortable with the place we sit in right now, which is, frankly, a network that is super customizable and purpose built for different types of applications. In terms of like custom VMs, this is something I get super excited about. I don't really envision a world where Fortune 500 and super savvy financial institutions are deploying EVM-based subnets. This would be like super wasteful. Basically, in my mind, they'll write a virtual machine that'll be specific for their one use case. So if you're writing a central limit order book, you might want this to be some peer-to-peer layer of how transactions are being sent. And that's something that virtual machine can be optimized for. And there's no reason that thing couldn't run at 100,000 transactions per second. So the TPS thing and the issue there that everybody talks about isn't really a blockchain problem so much as it is what's your use case, and is the EVM or any other virtual machine designed for this? Likely not, right? Because the EVM is general purpose, right? And so we think there's a world for the EVM. We think there's a world for other virtual machines, and Avalanche enables them all and the ability to talk to each other.
And so with that, going to open, up. I know we only have like 2 minutes left, so we'll go quick. I know we have one question, so this might be the last one we get to. But from John, any news on USDC CCTP on Avalanche? And maybe an explanation of what that is for all of us who don't know.
Yeah, CCTP is basically the way that Circle is going to facilitate going from different chains without having to rely on a bridge. Basically, they already have some centralized API, so if I'm on Ethereum and I have USDC and I want to get to Avalanche, I can basically send a ping through a bridge to Circle. They'll burn it on the Ethereum side and mint it native on the Avalanche side. And there's no bridge risk that's carried with that. It's a super rational, I think, focus and the way it really should be architected from the get. And we were announced, I believe, as the first launch partner of this. And from what I understand, that's currently under development. And basically,
so presumably with ETH, like ETH is, basically Avalanche and ETH would be the launch partners.
That's correct. Yeah, that's correct.
Awesome. Well, look, this was great. I think we're basically at time. This was awesome. If you guys have any final thoughts for the last 10 seconds, but if not, I look forward for you guys joining next quarter and keeping this up and keep going on this.
Great.
Thanks for having us.
This is wonderful.
Awesome.
Appreciate it.